get back to this stuff. Okay. One of the problems is that you don't look at the big picture. You don't look at the week. You don't look at the moves that are made and understand where you are in the cycle. Okay? A lot of you guys heard about Sunny. She's legendary. She took my class. I told the story that she actually fell asleep in my class for like an hour or two, and I was very insulted. Well, the reason I'm bringing her up is simple. Is that she took a segment of what I taught her and mastered it, and over time the other pieces fell into place. So here's what she did. She identified on the weekly cycle the peak formation high or low. Okay? So remember, we have the trap moves that are made at the beginning of the week to induce traders to take a position the wrong way and jam them up for the cycle. So if you can identify, let's say Tuesday or Wednesday, you identify the anchor point of the cycle, W or M formation, multi-session over Tuesday, Wednesday, or Monday, Tuesday. Okay? Now you know one thing for sure. If the anchor point is in place, you trade away from the anchor for 2.5 to 3 more days. I can tell you that if the anchor point comes in on a Tuesday, it is likely that they will rise for what's perceived as 4 days. 3.5 days, 3 days. Some of you write to me and say, Steve, I don't understand because there's 4 levels here. If the dealer is trying to trap lower level longs or higher level shorts, he will pull away from that area an extra day if it happens to fall on Friday. If he anchors in on Tuesday, the dealer anchors in on Tuesday and rises Tuesday U.S. session, half a day. He'll rise Wednesday, Thursday, and complete the cycle on Friday. Steve, you said 3 days, 3 levels. That's 4 days or 3.5 days, however you want to count it. It's more than what I've told you. I understand that. But if the dealer anchors in early because he completed the pattern a different part of the previous week, then you're still looking for trades away from the anchor point going into Friday if he issues you the signal. Okay? Understand that the trap moves are the key to your success in the business. It's identifying where the trap moves are made. On the broader spectrum, the trap moves are made at the beginning of the week, Sunday and Monday. Intraday, they're made at the beginning of every day, Asian session. Then they're made at the beginning of London's day and the beginning of the US day, which is the beginning of the sessions, right? They make a false move at the end of the session for that dealer to square his books. And they make a trap move at the end of the day and Friday at the end of the week to end the cycle. Now in this example, this week, they closed near the high and near the low in different pairs. They didn't make an aggressive pullback because they were shifting the zone and jamming people up for the gap or whatever happens to happen when they open here. What I want you to start doing is on the 1 hour chart. I want you to start looking at the levels and the cycle. I'm not drawing, I just have a slide up. I'm going to show pictures, don't worry, I always do. You guys give me a break, man. I promise you I'm not going to leave you hanging. Okay, so now, if they make a false move at the beginning of the week, what you have to ask yourself is, don't fall for it. Don't bite at the beginning of the week and get stuck holding a wrong directional position. Okay, everybody knows. Let me grab a pen, man. Okay, this is the tracer. Sunday, Monday, right? These 2 lines. This is Sunday. Sunday's a short day going into Monday. Okay, so now the dealer comes out of the consolidation, hits the stops or picks up the pendings, whatever happens to be there. He rises quickly and shows something to the traders. Look at the moving average just fanned out. He shows something to the traders. He shows longs, right? He pulls back and holds the level. People think that the continuation is warranted at the beginning of the week. The dealer then hits the stops, picks up the pendings, stop, hunt high, drop away from the peak. Now you know that this is the beginning of the week. You're only going to get 1 to 3 levels out of the false move week beginning. He jammed up long holders. Now he pulls away from them for a day or two. He will then drop price, show the crossover on the averages, make an anchor point, and then swing. Beginning of the session. Okay? A variation on this move played out exactly the way I've drawn it for you in USD-CHF and Euro-USD on Friday. Okay. Don't fall for this as a stop hunt. Don't fall for the false move to pick up the pendings and grab the breakout traders as a trade. Okay? It's part of their repertoire. All right, I will not change the time. We'll leave it at 6:30. Okay. All right, so look. One of the problems that a lot of people are doing is that they're taking this as a stop hunt high drop. They're taking it as a trade. Right? You're taking the first move out of the box as a trade, and it's messing you up. And then you're saying, Steve, I took this right out of the box and I don't understand. The best way to grab setups is to wait for a second leg. Now, I don't know if my friend Zaim is in here. He fell off the face of the earth when he started making big bank. But let me tell you this. If you wait, and I'm going to illustrate it for you tonight, and grab only trades that come out and are set in the trading zone exactly the way I'm going to lay it out for you, you will automatically start to have a higher level of success. Now, this chart is up here, and I want you to see something. This trade is not below the blue box. I know that. When you become more experienced at grabbing the perfect setups, you can start to see that the blue box is more of a guide. But if you are struggling and having problems identifying the setups, then I need you to take only those trades that are established by the proper formation of the trading zone, which I'm going to discuss tonight. Okay?